In today's video, I'm gonna show you everything you need to know about order blocks. First of all, what is an order block? An order block is a price zone in which a sharp move happened from institutional players. For example, in a bullish scenario, a bullish order block would be something like this here, where a big move happened. We broke the structure, which is important. We broke the structure and we came back into this area from which price reacted again. This would act as a new order block right here. A bearish order block is basically the same thing, just in a downtrend. For example here, where a sharp move happened to the downside. We broke the structure. Price came back into this order block and reacted again from it, broke the structure, and this would be our new order block. Now there are a bit more secrets to order blocks. How to identify strong ones and weak ones is an important thing in trading, because a lot of people get stopped out when trading the wrong order blocks. I'm gonna help you to identify the right order blocks, the order blocks that really matter in trading. There are some crucial things that make an order block really strong or weak. The first criteria for a strong order block is that it must have swept liquidity, just like here. This low swept the liquidity from this low, and that's where the move happened. That's where we broke the structure right here. Another small pullback came here. That's where our smart money trap is. It eventually broke the structure and came back into this small order block, which is a weak one. Why? I'm going to explain you right now. This order block did not sweep any liquidity. If this order block would look like something like this, for example, this would make this now a strong order block. This right here, because it swept the liquidity, which means this is the strong order block right here, and a buy from this zone would be valid. So that's the first criteria. Liquidity must be swept. Second criteria is where there is resting liquidity above an order block. For example, right here we have formed a double bottom, which is a sign of liquidity, which means traders that place a long from this order block, they trade out of a low probability order block, because this is the liquidity right here. If price comes back to here, shows a reaction, a lot of traders will enter right here. That's when they get taken out, and that's when price comes into the order block where it swept the liquidity. That's the first scenario that can happen. The second scenario that can happen is price will just sweep this order block as well and then push higher. I see this a lot, and traders mistaken this scenario as a change of character, that we are now bearish again, but that's not true, because this can act as liquidity as well, and now this becomes our order block because it swept the liquidity on the left, and price can easily come here again and push higher from there. The first criteria is the order block must have swap liquidity. The second one is that there must be resting liquidity above the order block or below it. The second criteria is that there must be resting liquidity above the order block, which makes this a strong one because there's liquidity above it. Which shows the price will just shoot through this liquidity into the order block and then move higher. Another crucial thing is how price moved out of this order block. Is it a small steady move up, or does price just shoot up like a rocket? Because that's true buyer's intent. This could be also a sign of sloppy just liquidity, you know? So if it must be a sharp move up. That's our three criteria. Let's show you how this would look in the markets. And don't forget to like and subscribe. So let's start with our first example. We are on the 50-minute chart right now on the USD. We can see that price swept the liquidity and broke the structure. On the way to break the structure, it formed a trendline liquidity, which is a strong sign that this order block is a high probability one. And price came back into this area, just showed us a beautiful reaction. Another one. Just the next day, price formed us 1, 2, 3, 4 tops, swept the liquidity, broke the structure. What happened right here? Same thing again. 1, 2, 3 top. Price came back into this order block, showed us a really strong reaction to the downwards again. Just the next day, happens every day. Price swept this low, created a break of structure. Price came back into this order block and just made a new higher high. On this way, it swept another low, which shows this is a new strong probability order block. What happens? Could be a small trend line liquidity. Price comes here, shows us a nice wick reaction into this order block, just makes a new higher high. On this way, what happens? We have 1, 2, 3, 4 tops. Price sweeps all of this and shows us a bearish change of character. Now it may take us some time until we get here, but that's not a problem for us traders. We are patient. What happens? Price comes back in here, sweeps that as well, and then we proceed to move lower. Now if we zoom a bit out, you can see we are just in a huge bearish market. Now what happened? On this liquidity sweep, that was our strong order block, price just induced it. It swept everything below, which we know is a really bearish sign. Change of character. Back into this area. And what happens? Price just breaks lower. Well, what happens here? Price swept all of this liquidity, made a change of character. Price came back into this area and also took all of this out and just proceed to make a lower low. In the exact same day, price came back into this area where it took off all of this liquidity right here, just makes a new low low. So you can see this happens pretty much every day. Just have to understand how to identify those high probability order blocks. just to show you that we can find those setups on every time frame. I'm now on the 1 minute time frame. We can see buildup of liquidity, price just swept it, broke the structure right here. On the way down, it created a nice trendline liquidity, came back into this area. This is a trade I actually took myself. Oops. And you can see just price comes and creates a new low. On the way, we can just move this. On the way, we can see price has swept all of this, made a change of character, and it just happens every day. Price comes into this area, shoots lower. And in today's price action of the euro-US dollar, something very similar just happened, where we swept the liquidity, broke all the structure right here, and price unfortunately did not come back into this area, and that's why I actually wanted to place a trade, but it didn't come into this area, so it isn't as safe to just to go short right here, which pretty much was a good setup as well, but I didn't take it. And right now we have a beautiful build-up of liquidity. 1, 2, 3, 4 touches on the trend line. And this is our high probability order block. And we will just see what happens tomorrow if we tap in here and move lower or not. So that's it for the video. I hope you understand now what an order block is and how to identify the strong ones so you can profit from it in your trading. Goodbye.